While Wall Street analysts chase momentum with 100% bullish ratings at market peaks, one trader consistently calls the tops and bottoms with surgical precision. Meet Alex Vieira, the analyst who predicted Duolingo's crash from $544 while everyone else was buying. When Goldman Sachs had a sell rating on Duolingo, Alex upgraded to strong buy from the bottom. When Wall Street maintained bullish ratings at $540, Alex sold 100% and warned of the coming collapse. Result? Over $200 per share saved for those who listened. This isn't luck. It's a proven system that consistently outperforms Wall Street's consensus. Alex doesn't just provide predictions. He delivers real-time insights, precise entry and exit points, and the contrarian perspective that generates alpha when it matters most. Stop following the crowd into market traps. Join the select group of traders who receive Alex Vieira's institutional-grade analysis. Don't just trade the market. Master it with insights that turn market manipulation into your competitive advantage. Discover Alex Vieira's complete trading methodology at autonomoustrading.io. Watch his free live masterclass trading session today.
So today I'm going to explain, or better saying, repeating myself, because you find all this information on the websites, including the app, ahead of the most important moves in the US stock market. Today we are going to discuss Duolingo, why the share price skyrocketed to $544. And once that happened, I recommended abandoning Duolingo. So here you were told Alex sold 100%. At that time I explained why did I sell to invest in other companies, and I announced at the same time that Duolingo, the share price, was going down. Notice that this insight, it was published in real time, telling you about the future and giving you the option whether to choose to rotate into better investments with more potential. For example, the case of Palantir, buy more shares, but also other opportunities. Or to sell short Duolingo, because I told you that the share price, it was going down. So the share price came down at $200 plus. Then the company reported earnings, okay? And on the earnings report, what did happen? The same situation, 100%, Wall Street, bullish, rating, strong buy. So I remind you that Wall Street today 100% bullish after earnings is the opposite, or precise the opposite of what they told you when I upgraded Duolingo to strong buy. Okay, so I upgraded Duolingo to strong buy from the bottom. It was coincident with Goldman Sachs sell rating. Today, everyone has a strong buy rating in Duolingo at a price of $460 plus, okay? Because their reiteration is the same reiteration that they did at $540, okay? So my job it was to inform you that, number one, do not buy Duolingo. Instead, use the earnings, if you have a long position, to sell, to take profits, because the share price is going down. Okay? So I repeated myself. And within 72 hours, you have the share price down over $100 per share. So everyone chasing the momentum or buying on Wall Street upgrades, once again, they lost everything. So why is this possible? My friends, I already told you this thousands of times, okay? Repeating myself and proving it live on the tape. I released not only insights or forecasts telling you what Duolingo share price it was going to do. So you have all the insights, and then I published case studies, price targets, and so on. As I told you when to sell, to buy, to give you a major competitive advantage, and this included in the free plan. Having said this, I told you that the action in the US stock market is all about corruption and share price manipulation. So what you have seen here in the past months is precisely the materialization of share price manipulation. So the share price, it was manipulated from $60 plus to $500 plus to for you to become a multi-millionaire, taking advantage of my forecast, again public, all this, and free of charge, and then abandoning Duolingo, while obviously then Wall Street that had been buying then Duolingo had to kept buying and retracing strong buy ratings while the share price goes down. Okay, so this investment process is very much similar to many others that you or I announced years ago. For example, the famous case of buying Lululemon from $37 to $500 and then downgrading to junk, and meanwhile the Lululemon share price crashed in 2025, as you were told, repeating last year in 2024 and again in 2025. So you've never seen any surprise, because, my friends, this has never been about any surprise whatsoever, because you were told about all this before all this stuff happened. Okay? Bye.